Okay, welcome to the deep dive. Today we're going to dig into a recent investment analysis focused on UnitedHealth Group.
Right, UNH, one of the real heavyweights in healthcare.
Absolutely. And this report we're looking at, it's exploring, where the company stands now, the opportunities, the risks.
Especially after that pretty significant stock drop recently. The source mentions something like 40% down year to date.
Yeah, exactly. So our goal here is really to pull out the key insights from this specific analysis. Why do they see value? What drives the company according to them?
And the challenges too, right? What hurdles do they point out? And ultimately, what's their investment call?
Precisely. So let's start where the report seems to kick off the valuation, especially after that drop.
Yeah, it jumps right in. It notes the price was around $303.12 when this was written, reflecting that decline.
Yeah.
And it flags the PE ratio,
The price to earnings, what number did they cite?
12.75 times trailing earnings. And the analysis makes a point that this is, well, lower than usual for UNH.
Lower how?
Yeah.
Like compared to its history?
Exactly. The report says their historical range is more like 15x to 17x earnings. So seeing it at 12.75x,
Suggests to the analysts maybe an opportunity.
that's how they frame it. They use terms like exceptional value and an attractive entry point, basically saying the market might be overlooking the fundamentals here.
Okay. And they also mentioned the dividend, right? That's often a factor.
2.76% yield.
Yeah.
And they highlight that 54-year history of dividend increases. Plus, just the sheer size market cap, around $276 billion. It's huge.
So the argument starts with maybe the price dip created a bargain. But okay, beyond the numbers, what about the business itself? What strengths does the report emphasize?
Well, it details several competitive advantages.
Mhm.
Big one, being the #1 player in Medicare Advantage.
Right, they have millions of members there.
9.9 million, according to the source. And interestingly, it notes they were actually gaining members when some rivals weren't.
And what about Optum? That always comes up with UNH.
Oh, yeah. The integrated Optum platform is presented as another huge plus. It's their health services side.
Serving a massive number of people, managing prescriptions.
Exactly. The source says Optum serves 104 million people. Optum RX handles like 408 million adjusted scripts. And Optum Insight provides all the data analytics.
So that integration insurance, pharmacy, data, services, that's seen as a key strength. A moat.
A definite moat, according to this analysis.
Yeah.
Plus, their leadership in data and tech generally, and just the overall financial and operational scale. We're talking over $410 billion in revenue.
Okay, scale integration. And this connects to another big theme the report seems to stress, demographics, the aging population.
Absolutely critical. The report really leans into the aging of America as a powerful tailwind. By 2030, all the baby boomers are over 65.
Which means a much larger pool of seniors needing health care.
Right. And the source even points out the 85-plus group, who use even more health care, is set to grow significantly, 56% by 2034.
Wow. And there's a spending difference, too, isn't there, between seniors and younger people?
A stark one mentioned in the report. Average healthcare spending is around $20,000 a year for someone over 65 versus maybe $8,000 for those younger.
So more seniors means significantly more healthcare spending overall.
Precisely. And the analysis projects overall Medicare spending itself to grow about 7.9% annually through 2030. This trend, they argue, is a decades-long tailwind for UNH's core business.
Makes sense. Now, how about recent performance? Did the report touch on their latest results, like Q1 2025?
It did, yeah. It highlighted Q1 as showing recovery. Revenue was up 10% year over year to about $109.6 billion.
And earnings, because there were some issues previously, right?
Right, but Q1 showed a recovery there too. EPS came in at $6.85 compared to a loss in Q1 of 24. Strong cash flow to $5.5 billion. And they added members 780,000 year to date.
So signs of resilience, operationally speaking.
That seems to be the takeaway presented in the analysis. But it's not all smooth sailing. The report does acknowledge risks.
Okay, what are the main concerns flagged?
#1 seems to be Medicare Advantage funding pressures, potential changes from CMS, the government agency. That's a big one.
Policy risk, basically.
Yeah. Also, elevated medical costs, particularly in that senior population they serve so much of.
Yeah.
And just the general competitive and regulatory landscape in healthcare, which is always tough.
Right, those are important caveats. So putting it all together, the valuation opportunity, the strengths, the demographic trends, but also the risks. What's the final verdict from this particular source?
The analysis concludes with a strong buy rating.
Okay. And a price target.
Yeah, a range, $375 to $425 over the next 12 to 18 months.
Yeah.
That implies, pretty significant potential upside from where the stock was 25% to 40%.
And what do they see driving that potential rise? What are the catalysts?
The report lists a few key things. Medical costs stabilizing, continued growth from both memberships and Optum, those big demographic shifts playing out, and maybe that PE multiple expanding back closer to its historical average.
Got it. So, from this perspective, the recent stock weakness is seen more as a temporary blip, overshadowed by the fundamental strengths and long-term trends.
That's the core argument presented, yes.
So, for you listening, this deep dive shows how one particular analysis breaks down a massive company like UnitedHealth. You see them weighing the valuation, the competitive position, those big societal trends, the financials, and the potential bumps in the road.
To arrive at a specific investment conclusion, all based on the reasoning laid out in that report.
We've basically walked through how this analysis sees UnitedHealth Group, highlighting what they identify as the value proposition and the growth drivers, but also the risks.
So maybe something to think about based just on what this source highlighted. You have these ongoing Medicare funding pressures mentioned as a risk, right?
Right, the policy side.
But you also have this huge expected growth from the aging population. So how might future policy decisions, or maybe even just unexpected changes in how seniors actually use healthcare, end up shaping that long-term picture the analysis paints? There's an interesting tension within their own points.